Good morning and welcome to Dark Gamma's pre-market analysis for April 6th, 2026. Samantha here with Billy, and folks, we are kicking off the session with a mild bullish gap on the SP 500, sitting at 6,596.5, roughly 14 points above Friday's close. The tone this morning is constructive, led by a strong showing across the Magnificent Seven, and technology is clearly in the driver's seat. The question for today is whether this gap has the legs to push toward the upper end of the expected range, or if we see a gravitational pull back toward max pain.
Exactly right, Samantha. That gap of about 14 points looks modest, but the context matters. Max pain is sitting at 6,530, which is roughly 66 points below where we are right now. That gap between price and max pain tells us options market makers have some incentive to see the market drift lower through the session. Now, the expected move for today puts us in a range of 6,506 on the downside and 6,659 on the upside, so we have room to work with on both sides.
And that range is key, Billy. 6,506 is essentially your floor. If we breach that level with conviction, the tone shifts quickly. On the upside, 6,659 acts as a ceiling where gamma exposure from options dealers becomes a meaningful headwind. Traders holding 0 days to expiration positions today need to be especially alert around those boundary levels because that is where the accelerated moves tend to happen.
Let us talk sectors because the rotation story is telling this morning. Technology is leading with nearly 1% of gains pre-market. And when you look at the Magnificent Seven, Tesla and Meta are out front, both up over 1% each. Nvidia is also contributing meaningfully at nearly 0.75%. This is a risk-on flavor, no question. But energy is the laggard, down almost 1%, which suggests commodity sentiment is not exactly firing on all cylinders heading into the open.
That divergence between technology and energy is actually a classic signal worth watching. When growth names are bid and commodity-linked sectors are under pressure, implied volatility in the broader market tends to stay relatively contained, which supports the idea of an orderly session within the expected range. Dark Gamma's framework would flag this as an environment where the SP 500 could grind towards 6,600 as long as open interest dynamics near the top of the range do not trigger aggressive dealer hedging.
So the scenario for today, Samantha. Bullish lean early, watch that 6,530 max pain level as a magnet if momentum fades into mid-session, and keep eyes on 6,659 as the upper boundary where the rally could stall. The Magnificent Seven cohesion this morning is the green light for bulls, but energy weakness and the gap to max pain are the two risk factors keeping this from being a clear runaway session.
Perfectly framed, Billy. For the Dark Gamma community, the roadmap is clear. Bullish gap, technology in the lead, range defined between 6,506 and 6,659, and max pain at 6,530 as the gravitational center to respect. Stay disciplined, manage your levels, and we will be back with updates as the session develops. Let us have a great trading day. On the economic calendar, there are no high-impact data releases scheduled for the United States today.
A quiet macro day. Focus on institutional flow and key technical levels on S&P 500.
The Magnificent Seven are painting a broadly green picture heading into the open, with every name trading higher versus last Friday's close, and Tesla leading the charge up 1.17% to 365.30. The overall tone for tech looks constructive, though the gains are modest and spread unevenly across the group.
Tesla and Meta are the clear standouts, with Meta up 1.12% to 581.17, suggesting momentum is clustering at the top end of the group. On the laggard side, Apple is the weakest of the seven, up just 0.34% to 256.30, which is hardly inspiring given the broader risk-on mood.
Nvidia is worth watching in the middle of the pack, up 0.73% to 178.35 as the market continues to price in AI infrastructure demand without a decisive breakout catalyst today. Microsoft, Alphabet, and Amazon are all trading in a tight band between 0.4 and 0.6% gains, pointing to a measured rather than euphoric open for megacap tech.
On the news front, the SpaceX IPO speculation is worth flagging. A valuation exceeding $2 trillion would be a landmark event that could lift sentiment across the broader technology and innovation space well beyond just the Magnificent Seven. If that story gains traction through the session, don't be surprised to see it act as a tailwind for risk appetite in tech more broadly.
Moving on to earnings. On the calendar today, no notable companies.
Earnings are powerful catalysts. The expected move reflects the options market's uncertainty priced in ahead of the report.
Looking ahead to tomorrow, Levi, GBX, AEHR, keep these on your radar for potential volatility.
High beta names can move well beyond the expected range. Always size down when trading around earnings reports.
The SpaceX IPO chatter is going to be the dominant theme at the open, with a valuation north of $2 trillion that could ignite serious momentum across the entire space and defense sector.
Agreed. And that dovetails nicely with the Red Cat and Hattie partnership news, since expanded domestic drone manufacturing capacity signals growing institutional confidence in the defense tech supply chain.
The wildcard here is the India government seeking safe passage through the Strait of Hormuz, because any escalation in that corridor tends to spike energy futures and shift risk sentiment heading into the first hour of trading.
With that geopolitical overhang, I would watch the gamma exposure concentration around the SP 500's key levels closely, since 0 days to expiration activity and elevated open interest near round numbers could amplify any early directional move in either sector.
Zeroing in on the nearest strikes to spot at 6,596. The 6,750 call stands out with 18,400 contracts and a 345.84% overnight surge in open interest. That kind of fresh positioning suggests dealers are hedging against a push toward that level, making it a firm resistance zone to watch.
On the put side, the nearest meaningful open interest sits way down at 6,325. Carrying 12,633 contracts after a 242.45% jump in open interest overnight. That gap between spot and the nearest put wall is pretty wide, which leaves the downside looking relatively unanchored in the short term.
With max pain sitting at 6,530, roughly 66 points below spot, the gamma exposure profile leans toward dealers nudging price lower through the session if realized volatility stays muted. The April 2nd expiry is carrying the heaviest total open interest at over 800,000 contracts with a put-to-call ratio of 1.558, reinforcing that broader defensive positioning dominates.
The takeaway for today is that 6,750 acts as the nearest call resistance given its dominant open interest and explosive overnight build, while support is loosely defined near 6,325 where put open interest saw its largest nearby percentage increase. Price has room to drift before hitting a meaningful options-driven floor, so watch for intraday gamma exposure flips around the max pain level.
Kicking things off with the SP 500 0 days to expiration gamma exposure levels. The gamma flip at 6,479.5 is the line where dealer hedging shifts from stabilizing to amplifying price moves. Right now, spot is sitting at 6,596.5, which puts us well above that flip level in positive gamma territory.
In positive gamma territory, dealers are selling into rallies and buying dips, which tends to suppress volatility and keep price action contained. That call wall at 6,605 is essentially the ceiling where massive call open interest forces dealers to sell aggressively, making it very hard to break through on the open.
The put wall at 6,450 acts as a gravitational floor, where heavy put open interest triggers dealer buying that cushions any downside move. With spot only about 8.5 points below the call wall, we are essentially pinned against resistance heading into the open.
The big picture here is that the market is coiled in a tight range between the put wall and call wall, with dealers acting as a shock absorber on both sides. A clean break above 6,605 would flip dealer gamma exposure negative and unleash a much faster, more volatile move higher.
Big money leaves traces. The highest liquidity concentration over 1 year sits at the 6,739 level, above current price, with maximum liquidity concentration over 27 sessions.
These levels represent zones where the highest institutional liquidity has accumulated over the past year, making them key support and resistance areas for S&P 500.
Over the past week, the level with the highest active liquidity is the 6,529 level below current price, with maximum liquidity concentration over 4 sessions. Recent activity confirms strong institutional interest in this area.
When price approaches these levels, watch the market's reaction closely. These are zones where major players have left a significant liquidity footprint.
This is a new section we're introducing today, Daily Institutional Positioning Tracking. Each morning, we'll scan the options market for large institutional bets and follow them day by day.
Today, there are no new signals to report, but we'll be tracking this daily so you can see how institutional money moves over time.
No institutional contract to highlight today. As we build this daily tracking, you'll start seeing the most interesting positions appear here each morning.
Come back tomorrow. This section grows more valuable as we accumulate days of institutional flow data.
If you want this level of market intelligence every single day, join Dark Gamma right now. Bots working for you, whale levels, real-time institutional positioning, opportunity scanners, and gamma exposure updated by the minute. You also get access to institutional liquidity and options levels for any ticker, ready to drop directly into your TradingView indicator. Exactly where institutions are positioning. No noise, just data. Dark Gamma is the edge that separates winning traders from the rest. The information that moves the market in your hands.